Hello, it's Big Chads. This is the Trading Encyclopedia Daily Education series on my YouTube at Chads Trading. Find me on Twitter at Big Chads and Bitcoin Live, where I am a founding analyst. For today's video, we're going to take a look at a selection from my second book, Trading Wisdom, 50 Lessons Every Trader Should Know. Very popular book. It's available on Amazon, but I also have free versions on my YouTube. I have the Trading Wisdom playlist, and then I'm putting the entire book in the Trading Encyclopedia playlist, this playlist itself. And so we're going to go ahead and do lesson 45, which is how to set your target. And people ask me all the time, what is your target? And I usually tell them that's the least important question. It's more important to know what your trading idea is, so you can know how to define it, so you can know when it fails, that's your stop loss. And generally, you want to focus on following a trend and not a target. If you get some type of a price target in mind, you're going to convince yourself that it's got to get there. It's going to that level, and you may end up ignoring price information in the interim, right? But there are some reasons to use targets. Major structure above, maybe to take some profit, a little bit of profit prematurely to pay yourself for a good idea, and just to calculate, for example, the risk reward of any trade. You want to have at least a 3-to-1, risk to reward ratio. I have a separate video on that. But let's take, for example, in classical charting, the measured move. And that's what these first two talk about. First, it talks about you measure from the breakout price, and then you have the measured move based on the height of the pattern. So let's go ahead and look at what that might look like. So let's say you have a bullish rectangle or even a sideways bull flag. The price is advancing, sets a peak, comes back and consolidates and sets the low, right? So you have a pretty well-described bull rectangle. Well, your measured move would be the height of the pattern. You take the height from the peak to the trough and you extend it out. That would be your measured move. Same thing is true, for example, like a head and shoulders. Say you have a move down, head and shoulders reversal, set your shoulder, set your head, and you set your shoulder. And the price is right back to the neck baseline. You're getting ready to trigger, and you want to know, hey, what's my measured move, Chads? Well, you take the height from the head to the neck baseline, and you can extend that out. That gives you a very rough measured move. And of course, you don't want to ignore things like, let's say there's major resistance here. Just below that, you want to pay more attention to the resistance than the actual price target itself. You want to focus on price structure. This is an example of a measured move with an obstacle in the way. I have a separate video on that exact concept. Now, you can also use major support or resistance areas, right? So let's talk about that. Let's pull up that. So let's say you have our bull flag or bull rectangle, and here's our measured move. But we know back up here, there was some structure. Maybe it formed some type of descending triangle and it broke down, it did all this, and it came back up. And we know there's not a lot of structure in between this level here and here. So maybe our price target might be all the way up here in that range, right? So rather than the measured, this is an example. This example shows you, well, your measured move has an obstacle. In this case, you can go beyond the measured move because there's no price structure. And maybe you think my target is going to be this area up here, this consolidation area. I know that this lost support is likely going to become resistance. Now here with Fibonacci, you can use a Fibonacci retracement for like a buy the dip or a consolidation target, and you can also use extension tool for a price target, and I'll show you how to do that as well. So let's clean this up again. So let's say you have the price moving up in a bull flag, and it comes here and there. So that's the beginning of the move, okay? Beginning of the flagpole, and it's starting to consolidate. And you want to know, I wonder, I'm going to target maybe the 50% level. And so you can say, well, okay, I'm going to use the Fibonacci retracement tool. And here's the 50% level. And that's my target for consolidation, or maybe around the golden pocket, around this, 065 level, for example, or even a more shallow one, like the 236. If you use fibs, it's fine. You certainly can do that. This would be a way to use a target for a retracement, not exactly a breakout target. But we're using the extension tool. Let's say we have the price coming here, and now it's in an uptrend, and it's advancing. It sets a peak, and then it sets a new swing low, and it starts to advance. And you want to know, what is my target from this point out? You can go ahead and pull up the Fibonacci extension tool. You take the major low, major high, and the swing low. And that gives you an extension tool. This is used a lot in Elliott wave theory. And basically, if you take the length of this flagpole and extend from here, that would be your one move, right? You see, if you just continue this all the way out, basically the same height. If you think it has more legs, you can use, for example, the 1.618, right? So you can use Fibonacci extension tool if you'd like for a price target. So there's a lot of different ways to set the target. For me, the most important thing is to really just focus on price structure and don't get too convinced on a price target of where you think it's supposed to go. This is how to set your target. And this is the Trading Encyclopedia Daily Education series on my YouTube at Ched's Trading. Find me on Twitter at Big Cheds and Bitcoin Live, where I'm a founding analyst. Folks, thank you so much, and I'll talk to you soon. Big Cheds out.